All right, as the countdown to the IPO commences, we're joined by Dan Stefan, Senior IPO Analyst with Privco. Good to have you on the show.
Great to be here. Really exciting time for us, and we're looking forward to tomorrow.
$68 a share. That values Alibaba at a whopping $167.6 billion. Firstly, what do you make of the price?
I mean, that's exactly the price we thought they would price it at. We know that Jack Ma wants to leave a little room for that pop. We at Privco, however, believe that the stock fair value is actually $100.
$100. So there's no danger of jeopardizing the position that they were going for with that conservative price range, making sure that they wouldn't have the same situation of a post-IPO drop like we saw with Facebook. You still think they're in a sweet spot?
Exactly. In our minds, we think there's a sweet spot. They've been acquiring so many companies this year alone, over a dozen companies, and really think that value from there will just boost that price up.
But let's look at the valuation. $167.6 billion. That's more than double eBay's $64 billion market cap. That even tops Amazon, and Amazon's been around for 20 years or so. A 44 multiple price to earnings ratio is roughly what that comes to if you look at the earnings of the last year. Not too out there for your likings?
I mean, for us, we don't think so. We think that given their acquisitions, you really need to value those. In the past year, over a dozen, more even
including
beyond
that football team.
Exactly. So Evergrande FC, they acquired a position in that. So they're really trying to get companies of all different kinds.
All right, so where do you see the stock going tomorrow? Let's get a prediction on the table.
We don't want to pinpoint a certain number, but we definitely see a significant pop happening. It's definitely going to be a big day, and we see that volume's going to really drive that price up.
At what level would you feel comfortable buying?
We don't want to give investment advice. We can just say that we value the company currently at $100, so people can take that.
Well, one of the issues here is that a lot of insiders are selling their stock tomorrow. In fact, 61% of the money that's going to be raised is going to go to insiders. Only about 40% is going back into the company's coffers. That's even less than what happened with Facebook. Is this an issue?
We don't think it's an issue. We really know that there's a lot of demand. The source we talked to said that there are over 50 institutional investors that would pledge over $1 billion each. We know that the offering is a little over $20 billion, so there's really a lot of money on the table.
But what's the deal with the lockup period? Because the regulations here are somewhat different with regards to the insiders for this deal.
Yeah, it is a little different. It's something that we looked at, but we still stand firm with our $100
So explain what the lockup period is. How long do investors have to wait, inside investors have to wait before they can sell? What's the specifics to the Alibaba deal?
So it's going to vary depending on every company. So for Alibaba, it's very different, as you mentioned, from other things. But we think even given that the demand is there and that the stock has a good value of $100.
Okay, well, one of the other issues to think about is the oversubscription. Reports say that it was oversubscribed about 3 times. Does that seem right with what your findings have been? I mean,
yeah. From the 50 investors alone, they each pledged $1 billion. That's $50 billion right there, and they were only offering about 20. So from that alone, there's really a lot of demand there. So we think that just given the strength of the company and that exposure people can get, it's there.
But 3 times oversubscribed, that's less than what Facebook's oversubscription looked like ahead of the IPO, right?
Yeah. It's potential that a lot of people just want to see how the company does. A lot of people may not be familiar with the name, but we really think that institutional demand is there.
Is that because there wasn't so much brand name recognition amongst retail investors?
I mean, there's a potential. We think a lot of the investors at the beginning will be the institutional investors, and as the company develops and the brand becomes there, we think more retail.
All right, Dan, all week long we've been talking about the so-called Baba effect, the effect that what is said to be the biggest IPO is going to have on the market at large. We've had liquidity issues with investors freeing up cash from other social media momentum stocks in order to buy Alibaba. And we've also had some proxy plays, other shares that are affected by the deal, rising on the Alibaba news. What kind of overall market impact do you think we're going to have tomorrow?
We think there's definitely going to be an impact. We know that investors have been freeing cash, and we think that there's going to be a lot of volume tomorrow. There's something called quadruple witching that happens 4 times a year. So the stock and index futures and options all expire tomorrow. So that alone is going to create a lot of demand and a lot of money that people can use.
Do you see other shares being bounced or trounced because of this, and specifically which ones?
Potentially, possibly other companies in the tech sector. We speak more to the private companies, so we don't want to speculate that, but we think that people have already strategically moved the funds that they need to be able to acquire it, and additional funds will come up from the option expirations.
All right. Well, big day tomorrow. Thank you for your insight. Dan Stefan, Senior IPO Analyst with Privco.